AMC stock is in the green by about 2.5% at the time of recording this video, and so is the markets. Markets are absolutely ripping today. This is because the banking collapse contagion is not spreading as fast as it has been over the last couple of days. We have some news specifically on that I want to bring to your guys' attention. On top of that, you have major earnings in after hours today that I think will move the markets. Like, most earnings don't move the whole markets, but this specific company in after hours will move the markets. They always move the markets. And this was a very important company in the beginning of 2022 that started some of the pain. Now, on top of that, we're going to get into everything company specific on AMC that you need to know. I do think this could be the start of a relief bounce with AMC as investors start to realize, hey, this is probably not going to pass through the court system. We've went over that many times, but at the bare minimum, it's going to take months and months and months before anything happens. So we have a lot to get into in a very short amount of time. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section if you have not already. So AMC up 2.5% at the time of recording this video. It's a slight bounce, right? We've fallen quite a bit over the last 2 weeks. So it's a start, right? Can we say it's a start? And I do think it's exactly that. It's the start of a relief bounce. And I've been pretty forthcoming with you guys that I do expect to get these aggressive bounces as well along the way, because we got the court date, April 27th. Nothing is going to happen from now until then. Now, the odds of this actually passing through the court system, I think, are pretty low, and especially passing through April 27th, probably not going to happen. It's going to go to the next court date, and then probably a court date after that. So you're probably talking early to midsummer before anything is finalized, and AMC could do anything. Now, that is if the courts don't outright say, hey, you gotta revote, you gotta not count the ape shares, right? There's a lot of possible outcomes there, but at the bare minimum, you've fallen a lot in a very short amount of time, when in all reality, you have a lot of time until anything does happen. That sets you up for a relief bounce, and I think this is only just the start. Now, you have a major option expiration coming tomorrow on AMC, but not only AMC, the broad markets. This is actually a quad witching, which some of these it just depends. Some of these quad witchings tend to be not very volatile, but this one is absolutely massive, especially on certain stocks like AMC. You have not seen this kind of option activity besides the rally in June of 2021. It has been 2 years since you have seen this degree of option activity. So I do expect tomorrow to be another very volatile day, especially considering the earnings that we have in after hours. And let's just talk about it here briefly. It's FedEx. Guys, FedEx is crucially important to the markets. It does show kind of the state of the consumer. If people are not using FedEx as much, if people are not getting packages delivered as much, well, that tends to be a very negative sign, and that's exactly what we've seen in the start of 2022 that started to cause a lot of these fears of a recession. Now, 1 year later, how are the consumers doing? What does FedEx say about Q1? It doesn't even necessarily matter on Q4 because that's the holiday season, right? It will matter, but more importantly, what does the guidance look like? What does FedEx say people are, buying or utilizing them right now? That's going to be the big thing, and that is what could drive the markets coming tomorrow. Now, obviously, bank fears, bank contagion, that is the pressing thing that is in the headlines as of recently. No shocker there. Now, First Republic, this is pretty interesting. The big banks, Goldman Sachs, JP Morgan, Morgan Stanley, they're trying to bolster liquidity in First Republic, possibly looking at a buyout, but at the bare minimum, making sure they don't go bust. And this is pretty big because it shows you that if other large banks are willing to take on the risk, then maybe it's not as bad as we fear it is. And that's the important part. Why would banks take on that kind of risk? Well, it's because they obviously don't think the risk is that bad. So That's a big part of today. As well as that, you have Janet Yellen coming out saying the U.S. banking system is stable and deposits remain safe following SVB and Signature failures. On top of that, you had some reassuring comments from ECB's Lagarde, basically the Fed Jerome Powell of Europe, that things are pretty good. European Central Bank hikes rates despite market mayhem, pledges support if needed. They just said, we're going to raise rates. Screw it. If you need help, we'll help you, but we got to get inflation under control. That is a very positive thing. Let me explain to you guys why. Because if the Fed goes from just 3 weeks ago, Fed Jerome Powell saying we have more work to do, we could increase the pace of rate hikes, the dot plot's going to be a lot higher than where it was last time based off the new data that we got. Well, if that changed in 3 weeks and the Fed's all of a sudden pausing rates and the markets are thinking about a cut or 2 cuts in 2023, that means something absolutely broke, just shattered. That's not a good thing. So believe it or not, if you take a look at the federal funds rate monitor tool, this is basically projecting where the Fed is going to raise rates or how the Fed is going to raise rates. Is it 0.5%, 1/4%, no rate hike at this March 22nd meeting, which is next week? This gives you the probabilities. Now, yesterday's probability numbers, you had a 76% chance, or a 38% chance actually, of getting a pause, right? That was yesterday. Now you're at 23.2% chance of a pause, 76.8% chance of a 25 basis point rate hike. Why this is bullish and why I think this is the reason the markets are rallying, because if the Fed is able to still raise rates, which a lot of people are saying they need to do, right? Inflation's still like 6% year over year. That's a good thing. That means maybe the system's not as bad as we expect. Now, if the Fed were to come out and pause, well, that's showing you that, hey, if the Fed's fearful, maybe we should be fearful. But at the same time, don't be confused coming next week. If the Fed does raise 25 basis points, which there's a 76.8% chance they will, anything over 50% is what the Fed is going to do. So you want to watch this very carefully heading into March 22nd, because a pause still is on the table if it's over 50% priced into the markets. Now, if the Fed does raise rates 25 basis points, then you bring in this dynamic that the Fed's raising rates, you're getting bank failures, the economy is not going to be doing so hot, give it a couple months, due to these bank failures. Usually bank failures lead to deflation, so there's not really a good outcome, to be honest, for March 22nd. Either you raise rates when banks are failing and the economy is going through the toilet, and you're also getting the yield curve inversion, which is uninverting, which shows an imminent recession is coming, or you pause rates and then the markets think, well, hey, why is the Fed so fearful? Maybe we should be fearful. So there's not really a good outcome here. It really puts the Fed in a bad spot, and I don't think that is good for equity market. So do keep that in mind. That is very important. Now, that is really what is happening here on the day. As far as economic data coming out tomorrow, you do have, let's go ahead and pull it up for, it's going to be the 17th, which is tomorrow, which is Friday, the big option expiration. The Michigan Consumer Sentiment Survey, preliminary numbers for March. Now, the biggest thing you want to watch, the only thing that really matters all too much, is inflation expectations. If inflation expectations go down, that's going to be very good. If they go up, not going to be good at all. I imagine they're going to go down, so I imagine it's probably going to be a bullish thing. So that's what you have tomorrow. You did get the initial jobless claims numbers, which came in better than expectations. They actually dropped 20,000 to 192,000. Continuing claims decreased 29,000, and you also did get single-family housing starts that increased 1.1% in February. Import prices fall 0.1%, down 1.1% on a year-on-year basis. So not good for inflation, right? Jobless claims going down again, not necessarily a good thing. Continuing jobless claims again going down, not necessarily a good thing. Import prices falling, that is good. And housing starts increasing, that is good. So you're getting a lot of mixed data here today, but really you got to summarize it down to Europe still raised rates, even though there's a banking crisis. That's positive, right? That really takes some fear off the stock market. The last thing you want is economic troubles to be happening, banks collapsing, and the Fed having super high inflation and pausing. That's not, it's just not good. Hopefully that you understand how that is not good. Now, and that's if you just wanted to summarize today, but in all reality, there is a lot of good and bad really happening today, but I think the good definitely outweighs the bad. Now, let's get into some things that are happening with AMC as far as the data is concerned. AMC is now at 4.5%, so you're getting a little bit more of that bouncy bounce. Live short interest off free float, 24.39%, 126 million shares that are currently sold short. Cost to borrow average, 312.52%. Cost to borrow max, 358.44%. Cost to borrow minimum, 195.07%. These numbers are increasing exponentially today. Cost to borrow max up about 45%. Cost to borrow average up about 100% today. And the interactive brokers short availability, that cost to borrow rate is up about 25% here today. 300,000 shares that are currently available. If you take a look at the option activity, no surprise here, 11 orders totaling $500,000, positive order value of 0%. Now I want to highlight for you guys, cost to borrow rates going up shows volatility is going up. Think about earnings. Think about any major event with AMC in the past. You have seen the cost to borrow rates that spike up until the event, as they should, because volatility is going up. The stock could, go up or down big, right? The cost to borrow rates should go up. That's showing volatility. Well, after the event, you should see cost to borrow rates falling, not rising 100% day after day, right? You should not be seeing that. And that is showing you there is a lot of volatility to come. And this story is far from over. And you are going to see a very aggressive bounce if it's not all today. I mean, AMC is up 4%. I wouldn't call that an aggressive bounce. Then you're probably going to continue to see that tomorrow and over the next couple of weeks. Taking a look at the FTD numbers. No surprise here, they are very high for tomorrow. You got 6.8 million FTDs that come due, but you're going to be looking at numbers that are almost double 6.8 million over the next couple of weeks, guys. So FTDs continue to be a problem, and they will be a problem for probably a while here. AMC is not on the threshold securities list anymore, but that can change very, very shortly, or with short notice, I should say. Last thing that I do want to talk about is going to be the Stonko tracker data and the actual numbers for tomorrow's expiration. You got about 8,100 calls currently in the money, 732,000 calls out of the money. So hopefully you guys can see, coming on Fridays, there's no time left to expiration. Those options that go into the money have to instantly be hedged for, and same for the puts that go out of the money instantly have to be de-hedged for. Both of that, de-hedging puts, hedging calls, is buying pressure. And that's potentially what you could be setting up for tomorrow. It all just depends kind of how FedEx earnings go, as well as the Michigan consumer sentiment. I think that's the main key of tomorrow. Out the money calls, 732,000. Like I said, in the money puts 335,000. Out of the money puts at 828,000. Like I said, guys, you have not seen this kind of option activity in 2 years with AMC. So I do expect a lot of volatility coming tomorrow. Some pretty big moves up and down, definitely in the cards. So that is going to do it for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.